Hi, for today I'm going to discuss to you the financial markets and institutions. Hi, today I'm going to discuss to you the financial markets and institutions. That is chapter 2 of the fundamentals of finance authored by Mr. Brigham. The idea of these financial markets and institutions, they are provided or established in order that both parties, like those who need for the capital and also those who can provide for the capital, meet, and they can agree with the price, and there's a system that will facilitate them, and there are those people who manage the financial markets and institutions. So in this chapter, we are going to discuss to identify those financial markets and institutions existing in the United States, and also we are going to know how they work with those financial capital provider and those who need for the financial capital, and who are them, okay, and also the mechanics of how to facilitate the transactions. But before that, we are going to discuss a little background about the recent economy of the financial system, and also the logic why is it that the economy depends on the strong financial system. Okay, so the economy is basically measured in terms of GDP or GNP, or gross domestic product or gross national product. Now, in order that it can grow, or you can boost the GDP or the GNP, we need to promote the transactions, which will drive the economy. So the financial system is one of the vehicles in order that those savings or those excess money that are not used by every entity, like it's like a person or a juridical one, they can invest that into a certain corporation in order that it can move some products or services that will boost the economy. So without the financial system, it would be hard or difficult to for the investors to trust with the corporations without those intermediate parties. So that's the logic why is it that we have the financial system, and why is it that the economy depends on a strong financial system. So if this is not regulated, if there are too many fraud happening in that financial system, then the investors will not trust with the system, and also they are going to withhold, of course, as a consequence, um, their funds, and the economy will slow down because there are no more enough funds available in order to make it to boost the economy. In the past few decades, the financial system is not anymore what I mean confined in the United States. So because of the technology, it is cross-bordering throughout the world. So that's why it's a global system now. The point is that China, if they have some investment available in the US can offer it to China, of course. And of course, in China also, they have the financial system. So those investors coming from the US, they can invest in China. Likewise, also in Europe, they have also their financial system, like in London. So in London, if they have a lot of corporations that in need of the capitalization, and some of the investors in the United States are really interested with that because they have a lot of expensive money, they can invest capital, so they can have some trading in terms of financial capitalization. Okay, not in trading in the commodity, but in terms of capitalization. Okay, so the innovations of the technology is really a lot of help for those talented people who are need in capitalization. Let's say, for example, if you have some invention and you are located in the Philippines and you need some like capital for that, then you can tap one of the people in the financial system that can facilitate with your need. And that would easy for every person in the globe, in the world, that they can um, do make their idea possible and turn that into product or services and into companies. Okay, so however, despite of the benefits of this one, well, there are a lot of problems or issues that are experienced by the corporations or the players in this financial system. Why? Because there are some Well, we cannot avoid that if you cannot catch those fraudulent act, like for instance, like what happened in 2008, that there are a lot of subprime mortgage involved that were not regulated. So that's like it created like that one a recession for the economy and also financial recession. So in effect, a lot of stock price turn into down price. So like for instance, like the Netflix, like the Facebook, because of that, and a lot of corporations, startups, or those who are existing, they are experiencing some difficulty in having that IPO, initial public offering, and also those who are going to raise some money in order to start their business because of that consequence. Again, there's a trust issues in this. However, that is only temporary. Again, that is only temporary. It's because like there's a what you call it, like the recovery. Like for instance, like what happened in Alibaba. So there is 25 billion in September 14. So there this raise of capital is not only in China but also in the other parts of the world who can afford or who can provide for this capitalization need by Alibaba company. This is the term for the startups to that need like with a value of $1 billion. So among the startups are the Uber, Airbnb, and plain Palantir, all that valued at 20 billion or more. So the lesson for this is for the financial managers and also for the investors, they're not deciding like raising capital and how much to raise and also the price that is involved. They are not deciding in a vacuum. Like they need to consider a large and complex financial environment, okay, which is affected basically by the financial markets and institutions, and also the tax and regulatory policies and the state of the economy. Since this is global, so it means to say that you are not only focusing to one country, their the climates, the state of economy, their politics, like that, or there are some changes in the taxation or what. So you have to consider all of this because the primary goal of having the capital, raising the capitalization, is also to boost the value of your corporation. So the value of the corporation, it comes to that, will depend upon the stock market or the price of your stocks. And the influence of the stock price is not only depending on to one economy but also globally. So that's why it has to consider, every managers and investors has to consider the complexity of the financial environment and the size of it. Thank you.